Welcome to the Macro Report. I'm Jay Fielder. Welcome to the market. Welcome to the market here. We're looking at the dollar index here, DXY. And we've been saying for a while here that the break of this is going to be a risk on signal. And if you notice, right, if you're not familiar with patterns, this is a pretty much a bear flag. It's a bearish signal. And below the level on the dollar, we talked about this yesterday. This is basically signaling risk on, right? We're getting probably the strongest macro signal for the markets in general, crypto, equities, right? Maybe not bonds yet. Maybe not bonds yet. We'll see. I think bonds do catch a bid. Also, we'll talk about that. But definitely getting a signal for the bull market to continuously confirm higher, right? So it's confirmation here. Why is that? We're going to go over that. But either way, the dollar breakdown is kind of what we're looking at here. If this thing continues to hold over the weekend, over next week, I think it goes lower, it sinks lower, and it signals risk on, right? We got 10-year bond yields here. 10-year bond yields. This is the cost of capital here, the benchmark rate, U.S. Treasuries, and those I think they've peaked out. Especially after the very weak inflation reports, that both the reports we got on Wednesday and Thursday, confirming that inflation is actually falling faster than we initially thought. So we are getting that deceleration in inflation, and so the bond market doesn't need to continue tightening. You're getting some demand come into bonds because pretty soon the rate of inflation will be below the interest rate you get on the bonds. As a matter of fact, it is, because if you're getting 3.8%, inflation's headlines at 3%, then you're gaining value on the bonds. Now, initially people say, well, you're not looking at core. Well, it doesn't matter. Most people are, you can't take out energy and food and expect that to be the real inflation rate. It is core. It is tracking some other parts of inflation that are important. The underlying structural parts well, not structural, but just, services, stuff like that. But for the most part, you want to, consumers are concerned with their energy prices. The first thing they look at is the gas station, right? They look at the gas station prices. That weighs on their confidence. They look at food prices. That weighs on their confidence. So when you add that together, you get headline inflation, and that's at 3%. And we expect that to drop into the twos, right? So you do get the bond market catching a bid here at the bottom of the range. And, I think the stock market, the equity market, is in now wave 2 FOMO. We've just broken the highs, right? So jumping over to that, you see we're getting the breakout here on S&P 500 above the 4,400 level. We pulled back. We said, hey, each pullback is going to get bought up more than likely. We should see a pullback, and we should see that support. And we got that. We got the pullback. We got the support. Now we're moving higher. S&P, this is the weekly chart. Let me jump over to the daily so you can see it a little. You get the pullback support. We tested the highs, came back, and we supported again. Everybody got scared on this red candle, but we moved up again. So the stock market is in wave 2 FOMO. That's what I like to call it, right? Wave 2 is, we're going to all-time highs. 2023, I believe so. We're not even that far. How far are we from all-time highs? Let's take a look at that. We are 6% from all-time highs. And a lot of cash on the sideline, a lot of FOMO coming into the market, right? Now back to the macro, right? Our big risk is actually playing out right now, which is oil. Oil, the energy prices are starting to break above the previous level. So that is a risk off signal. That just means that the inflation report in the next month might be a little stickier. It's not going to drop as fast, right? We're not going back to 2%. It's going to slow down. So that's a bit of caution there. Looking at the VIX, though, the VIX is still rolling over. The VIX is tumbling over, right? So volatility is tumbling over. A lot of people say the VIX doesn't work. Well, I don't think so. I think it does work. And if it didn't work, we wouldn't get the market bidding up so fast while the VIX drops, okay? This is the volatility of the VIX. It's on its way to making new lows. So the vol of vol continuing to fall. We have NASDAQ volatility also, rolling over. Signaling the next secular bull market. We got the MOVE index, which is bond volatility, coming down. Very good sign. When this trend breaks, that's just more confirmation that there is no credit risk, not only credit risk, but lending lending can loosen up a little bit. Lending is kind of tight. And we did get some reports from JP Morgan today. By the way, JP Morgan beat earnings, Wells Fargo beat earnings pretty significantly. Those are the too big to fail banks are going to do rather well on their earnings report. It'll probably come down to the regionals where we see some damage being done. So we got to, we got to keep track of those regionals. There'll probably be a little bit of volatility coming into the market as the regionals are weaker than expected. All right. But bond volatility is coming down. Move index, that's good. All right. Now, triple B spreads. Here's why, you might hear there's a lot of credit risk in the market, but that's just not true. The triple B spreads, which measure equity debt versus treasury debt, is coming down. And what that means is there's risk. People are taking risk in the equity debt market, right? Versus the treasury market, because they're more bullish on the economy. The economy is not falling apart. It's actually still expanding, although the expansion is slow. And the real concept is, or the forward-looking idea is that the economy is starting to bottom. Growth expectations are starting to bottom. We got the Fed now GDP actually starting to turn up. Well, not turning up, but the Fed now, Atlanta Fed GDP tracker actually increased. Sorry, we're a little shaky here. Actually increased their expectations. We also had a revision up on GDP last week, and I expect that to continue to play out. Man, AMD is on fire. If you did not catch it, we've been taking a look at AMD. AMD is on fire. Junk bonds, right? So these are basically high yield. This is high yield debt, equity market high yield debt. It is continuously, it's been on an uptrend. It looks like it's starting to break now to the upside. That's another risk on signal there, right? And then we already looked at the S&P 500 bouncing. We looked at the technology index. Wow, tech is really making a move there. QQQ at the 380, very strong, extremely strong. All right, we got Dow trying to break out. We'll see if Dow gets out of there. I mean, the thing with Dow is, technology is leading this rally, and it will continue to lead this rally. So you're not really getting, what up, Asan? You're not really getting a whole lot of rotation into Dow, because at the end of the day, who's going to win in a elevated inflation? Yeah, inflation is coming down, but it's still sort of elevated in some areas. There's still some credit risk. There's still a recession. There's still a rolling recession going on. And tech is just going to be able to still grow their earnings, increase their margins, and Dow companies or value stocks not as well, right? So Dow is kind of struggling there. IWM, which are the small caps, have been very sharp moves. So you are getting market breadth coming in. S&P equal weight, I think it is breaking out. I think it's starting to break out of that pattern. You see it trending higher. At least it is starting to trend higher. Let me grab that brush. So yeah, we made a low here. Higher low, higher low, higher low. So S&P equal weight also starting to move up, right? We have some strength. This is wave 2 FOMO. This is wave 2 FOMO, right? If you're watching the newsletter, go check it out. Link in the bio. I don't know if I could say that, but we're looking at this trend. We're saying, hey, the Nasdaq is in an exponential trend. Actually, let's make that bigger, right? Nasdaq's in an exponential trend, so it's at the top half of this uptrend, and it's still holding on. This would have been if we would have broke down, that could have been like a head and shoulders, but I just don't see it. A lot of momentum to the upside. We're getting a lot of more surprises, upside surprises also. So Nasdaq's moving up. S&P is also moving up, breaking out of that trend to the upside. This is actually more bullish than I initially thought. Now I am, I've been changing my forecast over the past couple of weeks and saying, wow, we moved up pretty quick. We're holding the level. Inflation numbers are coming out better than expected. The economy is what surprised me. I thought we would fall apart. We're not. And so we're moving up. So now flipping over to crypto, this is the total crypto market. We're still not out of the zone yet. We still need to get out of there. But when we look at the ETF, right, the expectation of the ETF coming onto the market, and now you get this crypto regulation concern starting to ease. We don't know if it's true. We will speak about that later, which is that XRP news, right? They are, the base premises, and we'll go through it, is that, buyers of XRP didn't expect for the value to go up, but it's kind of not true. It's a weak argument, but it does help crypto in the short run. I think more so altcoins, right? So if we look at the Bitcoin dominance, I just want you to parse this through your mind. Where's Bitcoin dominance at? Bitcoin dominance. Okay, there it is. Bitcoin dominance is coming down because that Ripple news, that XRP news, was actually a bid for altcoins. Because what it means is a lot of the altcoins won't receive regulation. If it does actually, if it's sustainable, altcoins will not be deemed a security. Therefore, they can stay on exchanges. And because if Ripple's able to trade on, if XRP is able to stay on exchanges, so will a lot of altcoins, including Chainlink. Wow. I'm just watching the move in AMD. It is insane. I've been waiting for a pullback to add to my position, and it just hasn't happened. Oh well. RIP AMD shorts. So Bitcoin dominance coming down. It might have peaked. Maybe not, but it might have peaked. We'll see if that ETF comes out. It probably goes right back up if it actually gets pulled. So Ethereum starting to make a move higher, obviously, because the whole altcoin, Web3 is all built on Ethereum, not Cardano, right? Not Polkadot. It is built on Ethereum. So Ethereum's bidding up, and our favorite coin on the channel, Chainlink, making well, it's not our favorite coin, but it's, it's one of those plays that gets you a lot of alpha. It dipped down to, $5 and we bought it, and now we're up 40%, right? We're up a lot more this morning, but we're up 40%. Chainlink, to link all blockchains together, we'll talk about in the future, or subscribe. Anyways, when we go, then we're looking at the macro here. We'll get to the actual data in a second, right? Now, what's actually shuffling on here? Traditional 401ks versus Roth IRA. Do you have any information on traditional? I believe we do. Soggy, we do on the actual Mind Growth channel, or the Mind Growth website. So if you are paying attention here, let's see. Let's go to the Mind Growth really quick. We have a question about Roth IRAs. I think we have. I'm pretty sure we do. Let's see, where's our search button? Roth. Individual retirement accounts, comprehensive guide to Roth traditional RI. So just type in, go to the Mind Growth website and type in Roth, and this should pick up, right? This should come individual retirement accounts, a comprehensive guide to Roth and traditional IRA. Sorry, go check it out. Yeah, no problem. All right, so back to the technicals, right? The macro technicals. We're looking at the different sectors of the S&P, and I wanted you to show this. Tech is going to keep rallying, right? This is XLI, so industrials are making all-time highs. This is the industrial sector, which is just or an ETF for the industrial sector, all-time high. So industrials, why? Because of infrastructure onshoring, builds, weapons, blah, 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 right? XLU. So this is utilities, not really making a move. Utilities are sort of stuck XLU because, and it looks like a big wedge pattern, but, growth is back, right? Growth and risk is back. Those bond yields are starting to peak. The dollar's, rolling over, and technology solves problems. Utilities, I don't know, right? Consumer discretionary, big move to the upside. I'm going to switch this over to the weekly chart. So we're getting a lot of momentum, bringing the RSI up in XLY, which is utilities, right? Big cup and handle-ish type of pattern. I'm sorry, consumer discretionary, if I messed that up. So consumer discretionary is pulling up Amazon, Tesla, automotives, things that consumers are going to spend on when they have excess capital. So we're seeing that starting to move up. XLP. So these are consumer staples, right? So, your I guess you could say your grocery stores, drugstore. I don't know if drugstore. I think drugstores might be here. I'm not sure. Either way, you know what? Where's the healthcare? We need the healthcare one. XL. I don't know what it is, but that's moving sideways. I'm just trying to show the divergence. What we're seeing is tech growth. Growth is starting to recover. This is XLC, communication services, right? This is starting to pick up. So all the momentum is in tech, is in technology / growth names, right? Financials, not really moving. Energy, not really moving. Basic materials, not really moving. Real estate, probably has a little more damage to go in the real estate sector. Maybe, maybe not. Looks like a pretty nice chart there if you want to get long real estate, but it is what it is. So that's what we're looking at here. Now, here's the other part. Here's the other story that we're seeing here. Now, if you've been watching the channel, what have we been saying? We've been saying we expect Joe Biden to keep stimulating, right? To keep pushing out the stimulus. And what do you know, right? what do you know? Joe Biden, as usual, is well, I don't want to say as usual, but we thought this would happen, is making a bid. 39 billion. So Biden administration forgives 39 billion in student debt for more than 800,000 borrowers. The Biden administration announced it would automatically cancel education debt. Now he is getting blocked by the Supreme Court for the what is it, the 400 billion, but they're going to do as much as they can. So will automatically cancel education debt for 804,000 borrowers for a total of 39 billion. So that sort of neutralizes the whole student debt repayments right back on. It doesn't eliminate it, but what it does is it keeps a positive narrative in the market, because you still have people, you still have spending that's going to happening, right? Spending is going to continue. The debt cancellation is as a result of the administration's fixes to repayment plans, which included update counts of borrowed payments. Okay. So, in conclusion, more stimulus, right? More stimulus happening. How significant it is, we'll see how it plays out. But that is going to be, a positive bid when it comes to the market, right? So you got that on deck, and we thought that we would see that. We kind of talked about that happening. Better than expected earnings. Yeah, JP Morgan, also Wells Fargo also beat earnings. So back to the market. Yeah, a lot of good things there, right? We're looking at Bitcoin also. I think Bitcoin's getting ready to rip. When it does, I think we go to 37K pretty quickly, right? 37K pretty quickly. Big candle on deck. Wow, AMD is climbing. AMD is a monster right now. Let's flip over to those charts. See, what is Apple looking like? I'm going to stick on this one for a second. Let's go to the 5-minute chart. See what we're looking like after the pre-market. All right, so Apple starting to move up. Oh, okay. I'm sorry, Hassan, I missed your question there. So Hassan, throw it on the screen. Do you think the big tech weight rebalancing on index will hurt the market? Maybe for a day. I really think it's insignificant. People are hyping it up. A lot of bears are looking for reasons for the market to roll over. It's up too much. We're overbought. But we're coming out of a bear market. There's still $5 trillion on the sideline. People are going to FOMO in. Fund managers have to, they got to perform at some point. And they got to perform at some point. So I don't think the rebalancing makes a big difference. I really don't. Maybe it puts a little, monkey wrench in the gears for a couple days. But I don't think it makes a difference, Hassan. Oh, we bought it at $5. Yeah, exactly. Chainlink. Yeah, we got in at $5 on Chainlink. I still got the post coming out. If you're curious, hey, what is Chainlink? What is it solving? We have time, but that will be coming out eventually. Couple things I gotta touch up on for that. But anyways, we got that at $5. We shout out to the chat. How's the sound? Sound doing pretty good? All right. All right. So we're looking at Apple here, right? Microsoft. We're just taking a look at the big tech. Microsoft finally, breaking out of that channel, moving up, gapped up. Google. Whoa, Google has a nice wedge pattern. I didn't even see that. I'm gonna put this on my other chart. See, what is that looking like on the 1 minute? We're about an hour in. Google is forming a nice wedge. Not that I'm trading right now, but Google is forming a nice wedge pattern. Sharp move away from price, forming the wedge. Right, that's a good setup there for Google if you're a trader. Maybe you're not. Netflix, I believe, already exploded. Out of that descending channel. Amazon. Oh, Amazon's starting to move now. Remember, it pulled back. It's been doing this over and over, where it pulls back, forms that descending channel, breaks out, descending channel, breaks out, descending channel. Now it's breaking out, moving higher. Meta. Meta has a clear resist 315, right? The hold of 315 going higher. on Meta. Tesla, obviously, you know, we're holding Tesla, you know, we're long Tesla. Tesla starting to break that downtrend also. Nvidia just killing it. I didn't anticipate this Nvidia to move up that fast. I was wrong, but I'm holding AMD, right? AMD is now starting to move off that channel. Very big move off AMD. So we had that downside channel. I tried to get in here. I think I got in here, got stopped out, and then I got back in on the break of this downtrend, right? Because I saw something I could have added, but I wasn't very quick this morning. I thought it would at least give me a pullback. It didn't. It just went straight up, right? AMD just went straight up, and I am not in scalp mode at all. I'm not in scalp mode, so I'll wait for the retest. Maybe we come back down to, you know, 119, 118. I'll wait for the retest. Okay. See TSM starting to move, Adobe starting to move again, Palantir pressing that $17 level at the moment. Square, ZS, Roku. Now Roku, you know, I've been watching Roku. I added another contract on the pullback for Roku. Still holding the, let's see, what are we still holding that $75 level. And yeah, come on, Roku, let's go. Get over the PDC line. ZM still there, not there yet, 100% yet. And what is ARK looking like? ARK is ARK slowing down a little bit? Maybe slowing down a little bit. I think Tesla will bring it higher, especially after the earnings picture. Coin, see Coin, how's Coin looking? Coin is forming a nice little pattern there. Let's pull back on the 30-minute really quick. I want to see what this is looking like. Yeah, Coin has pretty much cleared the resistance level. Man, oh my gosh, MicroStrategy on a rampage. MicroStrategy is on a rampage. It is squeezing the shorts. There was a 30% short float on MicroStrategy. SoFi, a lot of you guys like SoFi. SoFi is also starting to move up. All right. So yeah, that's what we got. That's what we're looking at here. Now back to the overall market. I'm going to throw on the trader charts. Let's get on this side. And then kind of go over a little bit of news that we're seeing coming to the market. All right, so what am I keeping my eye on? AMD for the pullback, number one, right? I'm waiting for that pullback on AMD. And let's do a run through really quick. What are we seeing on the overall market? The Qs breaking out to all-time highs. So let me throw the Qs up here. Not all-time highs, but we're at 52-week highs. We're breaking the previous zone, right? So here's the Qs. We're trending up. Actually, you know what? Let's put on that 4-hour chart. We had been talking about the 4-hour really showing us a lot more clarity on the macro. So we're going to go, macro 4-hour chart. This is the daily. See automatically. So yeah, macro 4-hour chart. Clear resistance at 372-ish. We broke past that. We went up in pre-market, consolidated, broke up again. So we're in wave 2 FOMO. We are in wave 2 FOMO. Here we go. AMD starting to give that, starting to show us a little bit of room. I actually do want to take off the gaps too. I don't want to see the gaps. I want to see this. So clear movement there, right? Oh, that's a lot better view. There we go. That's a lot better view. Clear movement for the Qs, SPY. SPY also breaking out, right? Already at 4,500. 4,500. Who would have guessed? Nobody would have guessed we're going to be at 4,500. Everybody doubted it. Maybe 4,500 year end. All the bears are having to reevaluate their positioning. They're trying to, they got to reevaluate the position. IWM small caps. Let's see what small caps are doing. Pulling back. Okay, well, they have a lot of support here at 190, or I'd even say 189. So we are getting that sharp little pullback. Let's see any news coming into the market. We hitting any news currently? S&P 500 consumer sentiment gauges soar. Oh, we just did. Yeah, we got the consumer sentiment. We'll go over that in a second. We'll go over consumer sentiment. Those did come out. Fed Goolsbee says there's a way to curb inflation without a recession. Weaker inflation data show the Fed is making progress. Yep, 100%. That's what we've been talking about. Import prices, export prices negative also, right? So that's what the backdrop is. That's what we're looking at here. We have a lot of strength, and I don't see that slowing down anytime soon. So we do have a lot of strength. And yeah, I'm looking at Roku here too also. I think I added up here and it dropped, but the market is strong. Overall market is pretty strong. Qs, SPY. So we're going to keep our eye on that. Let's drop over to Tesla. What is Tesla looking like? Tesla is forming a flag. Well, it's breaking out of the flag pattern. So if you're not familiar, oh man, don't tell me this thing is messing up on me. Look at that. Look at that. Oh well. Might be having some issues. Yep, I knew it. Probably have too many things open. Market's on fire. So this was the descending flag, right? The bullish flag pattern. We broke out of it at the end of day yesterday, and now we're pushing off PDC. So Tesla, before earnings even come out, making a sharp move higher. There's that pullback on AMD. Let's go AMD. Google still forming the wedge pattern. Check out Google. Keep your eye on Google. So yeah, let's go. I'm gonna keep my eye on AMD on this while we go through the macro. Dang, this thing is slowing down on me. Too many tabs. I must have too many tabs open. Let's go AMD 3-minute chart. Options Friday. Options Friday. And then I'm gonna throw on the trader, the actual trading. Oh yeah, you know what? Let me put this in the, let me throw this in the, in this, let me see, where can I comment at? Pin this comment. There we go. All right, cool. So we are in a very bullish environment, right? Dollar breaking down, huge news for the market. I mean, it's not really news. The dollar isn't the news. It is the signal. It's always been the signal. The dollar breakdown is a huge signal for risk assets, right? Bond yields peaking, big signal for risk assets. Can the Fed hike again? Yes, but I don't think the market really cares because we've already done 500 basis points of hikes. Okay, another 25, great, right? Okay, that ain't gonna do nothing. The market's already pricing it in anyway. So inflation expectations coming down, obviously, and we're gonna look at the macro to actually see that. Boy, this thing is really not working here. Sorry about that. This is me off when tech doesn't work. It's funny because when I type in Tesla, it always works. It's when I type in other stuff. AMD, let's go. I'm keeping my eye on AMD. We've got the pullback, but it is pretty, you know, now starting to support. Damn, that's not a big enough pullback though. Goodness. Come on, AMD. All right. So I'm gonna keep this up. Roku, AMD on the left-hand side. And then obviously you guys know, if you're not familiar, we got the Qs up here, top right corner, top left corner. You got IWM. It's selling off pretty hard, right? A lot of rotation into the big mega caps after the JP Morgan's beat on earnings. They beat earnings pretty well too. JP Morgan smashed earnings. Warning though, the red flag right now is advanced decline is negative. So this rally might pull back. I think a lot of it is in tech. The VIX down here at the bottom left-hand corner. So we do have the VIX at the bottom. If we get into the 12s, you know, it'd be interesting, but those are the boxes I have on the left-hand side. Oh, we do have the SPY. Did I take the Dow out? I must have took the Dow out. So you do have SPY right here in this box. All right. So let's take a look at those macros. What are we getting here? What are they saying on CNBC? Wells Fargo, Disney. Oh, that's right. Disney's making a sharp move, huh? Forgot about Disney. Here, let me throw up Disney. I know a lot of people are looking at Disney. Oh, must have been a pre-market move. I haven't even looked at it. Is this a buying opportunity for Disney? Not for me. I'm not interested. I'm not interested. Flat bottom here. Yeah, they've been talking about Dan or Iger, whatever his name is, Dan Iger, I'm not sure, for a long time. I'm sick of hearing it. I don't care, right? Why? There must be a lot of investors for Disney, but CNBC's had it on for the last 3 days. I'm sick of hearing about it. Big move on AMD. Yeah, AMD needs to have a pullback. I might not even try to get in today. I might wait for another pullback here. It's just up so much, so fast. I mean, that was a big move over the last couple days also. All right, so what do we got going on? Let's dial in. So this morning, and I'll go over the whole global economy too. Let me just get a little drink of this coffee. Got some nice coffee here. You guys drink coffee? Make sure you get organic and don't burn your coffee. What up, D-Maj? What up, D-Maj? What up, football legend, Soggy? I see you guys been here from day one. Prook, I'm bullish on SPY. Nice, Prook. What's looking good on the market today? Well, AMD is exploding. Roku is coming right back into that support from yesterday. We'll see if it holds. I think Roku's setting up. I'm looking at a lot of swing trades. Google currently is wedging. I haven't really looked at Meta yet, but Google is wedging. So I think Google has some room. It looks like it's pulling back a little bit from the overall market. But we're going to quickly go over some of this macro news. All right. So India, remember, India is starting to really expand their economy. Their deposit growth just moved up. And it's important to understand the global economy, or like the global liquidity factors that are pushing markets higher. The Indian stock market all-time highs, I believe. So you got India, bank deposits growth going up, bank loan growth going up, Brazil retail sales weak. Do we really care? Not really, because they're pumping liquidity. Their M2 is going up. U.S. import prices month over month negative, export prices negative, right? Year over year, same deal, negative. So there's no supply side inflation. Like, really, the inflation arguments are disappearing. They are evaporating, in my view, right? Inflation risks are evaporating. Somebody tell me they're not. Look at Disney's floor. Yeah, nice floor in Disney. Drinking right now. What kind of coffee you drinking, Hassan? What kind of coffee you drink? I'm drinking this African fruity coffee that my brother showed me. All right, so Michigan consumer sentiment we just got. Consumer sentiment jumped. It was at 64.4, just jumped to 72, and it looks like we're starting to recover. The economy is recover. Expectations. Well, what is Michigan consumer sentiment, right? I just throw it out there. What is the index of consumer expectations? Focuses on three main areas: how consumers view prospects for their own financial situation, how they view prospects for the general economy over the near term, and their view on the prospects for the economy over the long term. So near term versus long term. Each monthly survey contains approximately 50 core questions, each of which tracks a different aspect of consumer attitudes and expectations. The samples for the surveys of consumers are statistically designed to be representative of all American households, excluding those in Alaska and Hawaii. Sorry. Each month, a minimum of 500 interviews are conducted by telephone. Hey, trust it or not, either way, it is moving up. That sentiment survey is starting to move up. Dang it, Roku. Oh, are they talking about the student loan debt forgiveness? Yeah, I wonder how deep that is. I definitely want to hear what the difference is. We'll talk about XRP too and what that means for altcoins. Basically, XRP is opening. Well, the XRP the judge who ruled XRP as not a security, basically, it opens the door for altcoins. The problem is it's a weak argument and it probably will get shut down somewhere else. So we don't know, but it's not. It's progress, right? It's a little bit of progress. So, anyways, U.S. Michigan consumer sentiment survey starting to move up on the big trend. Inflation expectations are at 3.4. Ooh, not good. June we're at 3.3. Now we're at 3.4. So consumers are, and you know what? That's probably a result of the oil prices moving up. We got down to like 66, 69. Now we're back up to 75. Dang it. That's a negative in our favor. Michigan, let's Let's see what else we got. 5-year inflation expectations are at 3.1%. That's fine. We could stay at 3.1% and still continue to move up. So that's all the macro stuff we really have. There's nothing that important. Saturday. Let's see, Sunday, we won't be here on Sunday, but actually we do. Sunday, we might actually have, for those of you who are interested, we will likely have, hey, appreciate it, Salman Ali. Also, if you see, oh, did I pin the comment? Hold on, let me make sure this is pinned. Why didn't it pin? There we go, pin. So check that out at the top, charts. If you want to see the charts, come support me also. Help me get my subs up. Salman Ali. So anyways, point being is this Sunday, I should be having a debate with a macro bear. Okay, a bear. I'm gonna have a debate / discussion. I know you guys want to see blood, but we'll see what kind of personality he has. If he has a strong personality, there might be some blood. But if he's if he's a softie, no, I'm just playing. If he's a soy boy, no, he's a smart dude. Then we're just gonna discuss, because we're both crypto guys. I'm pretty sure he's a crypto guy, so he's bullish on crypto. I just want to see, I want you guys to hear the different takes on the macro, right? I don't know everything, but I'm pretty confident that this macro, I mean, we've been right so far, right? We've been right so far. We said, hey, dollar breaks down. Yield, we've been wrong about yields. I did think yields would slow down, but the positive is the economy is stronger. So that's why yields are up. Not because inflation is up. Inflation expectations are dropping like a rock. And now those guys in the bonds are going to get squeezed. And we'll talk about that, because I'm like, ooh, this is another bullish setup, which is bond yields coming down, right? The cost of capital coming down for riskier assets, which is why I'm long the riskiest of risk assets. Not the stupid, penny stocks. We're not talking about that. We're talking about big companies that have future expectations that do better off of like ARK Invest. Not them in general, but a lot of the stocks they're into, obviously Tesla, Roku, Tesla. What else we got? Zoom, and we'll update you on the Zoom position. But there's a lot of alpha there. There's still a lot of room for those things to move higher when rates come down and the market's already turning up and the dollar's starting to break down and VIX is falling, and global liquidity will start picking up pretty soon. It's already flattened, it's bottomed out, and it is starting to turn up. Anyways, we get China GDP, right? And check this out. China is going to have to start printing money because their economy is not recovering as fast as they thought they would. So expect more stimulus in China, right? That's going to bring up global liquidity. Only problem is that might weaken the yen. No, the yuan, the Chinese yuan. That'll weaken the Chinese yuan, strengthen the Japanese yen, strengthen the dollar a little bit. Right now, the Japanese yen is strengthening against the dollar. The dollar is falling against that because actually, I don't know exactly why. What is it? Are they tightening? Did they slow down on their yield curve control? Really complicated topics there. Either way, right, the dollar falling helps global trade in general. So we get Chinese on Sunday, GDP growth rate year over year, industrial production, retail sales, and you really get a big fat pitch of data in China. What is the second biggest economy? How are they doing? What are they looking like? What is the macro backdrop? Unemployment rate, retail sales, GDP growth. We get that on Sunday. Now jumping into Monday, right? And I'm just saying, this is what we get for. I'm forward looking. What is the market anticipating next week? We got nothing on Monday for the U.S. So next week is all growth data, retail sales. That's what we get next week. Where's the consumer? Are they falling apart? That's going to be key. Maybe we decelerate too fast. Maybe not. Maybe we accelerate. So we got to keep our eye on the retail sales and growth, because one of the risks to the market, which I believe the guy who I'm going to go against on Sunday, if he shows up or if he's able to do it, is he's going to signal. There's no way that anybody makes an inflation argument. Inflation is evaporating. It's going to have to be a recession argument. And my thing is, if you do, you're keeping your eye on retail sales. Are they going to fall? Payrolls are still pretty sticky, but are retail sales going to fall? That's still more goods than services. So the services economy is still contracting. So I'm pretty confident that the economy, there's no signs of the economy decelerating yet. Oh my gosh. Trending. I don't even want to talk about that. I can't even talk about that. Probably ban me for that. All right. So AMD. Okay, we get that pullback on AMD. Anyways, what's the price target for AMD on my analysis? It says 133 for AMD. So yeah, let's take a look at AMD really quick. I'll pull up the longer term chart. So what is the price target for AMD? I don't know what the actual price target is, but I am targeting all-time highs, right? Stocks never, like, when animal spirits come into the market, which, hey, you do have animal spirits and they are real, right? Big break of trend, especially AMD. Price targets usually, not all the time, but prices for these stocks that trade a lot of options, usually price just, surpasses the actual price target. So yeah, I don't know what the price target is. Dang, this thing is really messed up. I don't know what the price target is on AMD right now, but I'm basically expecting it to move to all-time highs, right? All-time highs, and then, break out further from there. And usually when AMD breaks, I've been watching AMD for like 3 years. It moves like a monster, but you really have to watch it because it can dump on you for a long for a long time. It can fall and dump on you for a long time. So you got to be careful with AMD. But when AMD breaks all-time highs, it usually just it moves, right? I've seen this multiple times. Now, hey, it's not like, it's a bigger company now, but the chips manufacturing, the AI, the demand for generative AI and for chips, and they're coming out with their super chip. It's extreme. So the narrative is there, the technicals are there, the macro backdrop is there, the setup is there for AMD to make all-time highs and then break out even further than that. But it is a big market cap, so I'm not, I don't think it's going to get there super, super quick, but it can blow off top. I'm looking for that blow off top for AMD, real blow off top for AMD. All right, so Prook, yeah, and if you guys have any questions on the macro, kind of what's going on, let me know, because like I said, that's kind of my specialty, I guess, on the media. I mean, on the social media, on the finances, is looking at the macro, being correct. A lot of people just look at regular indicators. Come on, Roku, man, I'm gonna have to stop out if this thing doesn't. I have to get out of one contract. I messed up. I got FOMO and I bought Roku. I got that long contract on this pullback, and I got a little bit of FOMO. Probably should have waited. Now I'm getting crushed. I'm up on AMD though. I'm up on AMD, up on Tesla. So I'm just trying to stay patient to see. We couldn't get past. This is a really sell signal for me. This is a really strong sell signal. I just want to see, can we hold? I don't want to stop out and then all of a sudden, Roku, bounces and I'm pissed off. So we'll see if it holds 75. I'll just have to take the loss. Got to be responsible for your decisions. Nobody else to blame. All right, so back to it. Anyways, price target for AMD. What do we got on here? Cool CPI. I like your detailed content. Appreciate it, Salman. Shout out to you guys. Prook. CPI. Cool PPI. USD at low. Strong job market. The only thing holding us back is GDP growth. Well, Prook, GDP growth is actually starting to get revised up. So a couple charts for you. I need to add these to the YouTube stream. Actually, I do have one on the YouTube stream. So if you're looking at the Bluetooth stream, because I don't want to say that too loud, let's see, it's up here somewhere. Here we go. So this is GDP. I'm going to show this. GDP estimates, right? So the market was estimating a 1.4% GDP for this quarter. And as we look at the data that's rolling in month over month, they just quarterly, they not annualize it, but they basically do some math and we got 2%. So GDP is actually above estimates. It's beating estimates for a reason. You also have the Atlanta Fed, and I'll take that down now. You also have the Atlanta forecast, the Atlanta Fed GDP. Can I pull this up somewhere? Let me see if this will let me pull this up on Bluetooth. There it is. All right, so this is the evolution of the Atlanta Fed GDP now, real GDP estimate for 2023 Q2, quarterly percentage, SAAR, whatever that means. So those revisions actually went up to 2.3. I think they were at 2% and they got revised up to 2.3%. right? And so right now, revisions are going higher for GDP. So I wouldn't even say GDP is the issue. And remember also GDP is the most lagging indicator. It's the most lagging indicator. So GDP doesn't really tell us what's coming in the pipeline. We kind of look back at GDP. We're looking backwards to see, okay, where were we, right? Um, whoa, big dump in the queues. Dang, it looks like I'm about to get stopped out in Roku. Come on, Roku. Don't do me dirty. Um, well, at least that creates an opportunity to get in on AMD, hopefully. So yeah, I don't think so. I don't think it's GDP growth. What it is nope, decline. What it is manufacturing growth, right? Do we bottom in manufacturing? And so because the PMIs, the Purchasing Managers Index, is negative for manufacturing, and oh my goodness, big dump. Oh my gosh, what so much fear. That hurts my feelings. I'm losing money. I know I'm losing money right now. Big dump. We'll bottom though. This is a sharp dump, so we should bottom unless there's some type of risk that I'm missing here. Man, that's a sell signal too. Big reversal. That is just a big reversal. I gotta slap myself for that one. I gotta punish myself for making that decision. Look at that big candle, capitulating candle, right? That is a sell signal. Moved up really quick, got FOMO, bought in on the pullback. I didn't chase it though. I waited for the pullback. And then it just kept going lower, got below PDC, didn't want to take the loss. Now we're at the actual lows, but we are bouncing. So 74.84, right? That's been the low. If we break below that, I just need to cut it. Looks like we are going to get below that. Damn it, that sucks. A lot of selling coming in on Roku too. A lot of selling coming in. It's the last line of defense right there. All right. All right, Soggy. We'll catch you later, Soggy. Bitcoin struggling to break 32K. More it fails, I can see it going down very soon. Yeah, still struggling. I mean, we'll see. 32K. Crypto can consolidate for a while. So I wouldn't doubt it yet. Especially with this market, I think there's going to be some rotation into crypto. There's just a lot of good things happening. So can it pull back? Yeah. Oh yeah, we come back to 25K for sure. But we need a catalyst, right? Right now the catalysts are in our favor, and we can look back on that to see if we're missing something. But for sure, yeah, Bitcoin is struggling to break over 32K. But usually it takes a while. It takes a while for Bitcoin to get going. So, anyways, back to Prook. Yeah, not GDP growth. What we're looking for really with the economy is we're already getting the Fed's pause, right? We got one more hike possibly. We'll see with this inflation data. It's really all about inflation. What else do we have? We have a fiscal policy coming in. So GDP is not going to collapse, right? It's not going to go negative. It's good that it is slow. It's not going to go negative because, the White House keeps printing money, keeps spending. And it's really saving the economy, to be honest with you, whether you forget your political views, whoever's in there, they're going to be spending to keep the economy from collapsing, right? Maybe they'll do it a little more frugal, but for the most part, you got to spend. And as long as inflation comes down, then the economy can continue to expand. The services economy is expanding. Meta, Richard, did you mean Meta? Or I don't know what Meta is. Meta. I'm not sure what that is. Just blew my account. Ouch. Would you blow your account on? All right, so yeah, we got that pullback on AMD. Maybe this is where you get long. That looks like actually a really good day trade for AMD, actually. Big blow off top. This is a good day trade. Now I'm wondering, should I take a trade? But I can't because I'm trading on my phone. So Look at that. Yeah, that's a nice setup right there. That is a beautiful setup for AMD. Beautiful setup. We're getting some support on Roku too at those lows. A couple buyers stepping in at the lows there. All right, what are they saying on CNBC? And oh, you know what? We do have the risk from UPS also, the UPS risk coming at the end of the month. We'll keep our eye out on that because that'll slow down the supply chains. It'll get resolved pretty quick, but that could be a couple of bumps in the road. Oh, Larry Fink is speaking again. So what are they talking about? Okay, so cryptocurrency. Let's read some of this. Cryptocurrency head for winning streak a week after sharply rally fueled by Ripple Corp. You do got support there. You got AMD coming up. I'm trying to see if I should change this. If I should pull this up. All right, yeah, let's pull this up really quick. It's just the Ripple news, by the way. All right, so man, AMD is pushing off that level. I'm wondering if I should add to my position here. Cryptocurrencies head for a winning week after sharp rally fueled by Ripple court decision. I think this was in New York too. Cryptocurrencies are heading for a winning streak after the court decision. Blah blah blah. Bitcoin is on pace to end the week. Okay, whatever. Just get to the point. Ripple's XRP led the rally after a judge in Southern District. Oh, it was New York. Ruled that it's a security in some cases, but not in others. And that's really the backdrop right now. Oh shoot! Okay, Aslan, I didn't even see that. Binance's U.S. just announced that XRP will be listed again. That's a pretty big win for crypto. That's a big win for crypto. So yeah, that's a big win for crypto. So it's a security in some cases and not in other. XRP is on track to end the week. I don't care. Solana, Cardano, blah blah blah. Most big crypto assets are in the red on Friday's. Investors hit the brakes. And this has been a three-year battle with Ripple and the security with the SEC and Ripple. There's a possibility that some of these findings could be appealed and reversed, which, yeah, because they're kind of weak. The filing even said that the court would issue a separate order setting a trial date. All right. So it's not over yet, but it is good news to some degree, right? You're getting some movement. Not some movement. You're getting some sentiment changes in the from the regulatory backdrop. So that ETF and regulation could really take us higher. Now, BlackRock. What is this BlackRock news? BlackRock has a responsible to democratize investing, including crypto. Larry Fink says. Oh, is this new? We gotta check this out. Is this Larry Fink? If this was a recent interview, we got to check this out. We're gonna definitely look this up. So BlackRock's move into crypto fits into the asset manager's giant, broader mission of creating products that are easy to use and cheap for investing. CEO Larry Fink says, we believe we have the responsibility to democratize investing. We've done a great job in the role of ETFs. The world is transforming. In the world is transforming investing, and we're only at the beginning of that. Fink says. BlackRock applied for Spot Bitcoin ETF June 15th, which appeared to spur a rally in the cryptocurrencies. Yeah, and that's where we're at right now. I want to see what he's actually saying, though. We are working with regulators because, as in any new market, if BlackRock's name is going to be on it, we're going to make sure that it is safe and sound and protected, says Fink. Fink had previously been critical of crypto in 2017, saying that digital currencies, the popularity was due to money laundering. However, interest from clients and the high cost of transactions motivated BlackRock to to a closer look at entering the space, Fink said. It's a differentiating value versus other asset class, but more importantly, because it's so international, it's going to transcend any one currency. Very bullish, right? BlackRock CEO very bullish on Bitcoin and crypto in general. Dang, so Wells Fargo is actually hiking net interest income. I'm just trying to keep track of these banks, and looks like the big banks, too big to fail, are increasing their guidance. We had talked about that EPS guidance is going up for a lot of these companies. Hey, this is going to be big, especially after as the Social Security reform debate heats up on Capitol Hill. Leaders weigh if raising taxes is the answer. Well, we already have some stimulus, and this is in reference to the stock market, right? Just more liquidity or less tailwinds. This week, the Senate Budget Committee met on Capitol Hill to consider the dilemma facing the program. The latest projections from the Social Security trustees show the program's combined funds may run out 2034. Oh, yeah, we've known that for a while. Proposals to increase levies on high earners have sparked a debate. Okay, so at the end of the day, what are they going to do? They're going to print more stimulus, and the Fed is going to go on the Fed's balance sheet. It's pretty much the story there, right? Nothing too surprising. But anyways, yeah, I do want to see the Larry Fink. I want to hear what this dude is saying. Is this today?
BlackRock out with his, of course, great quarterly results this morning. Earnings beating Wall Street's estimates.
Oh, okay, they did beat earnings. All right, so yeah, we'll check that out. BlackRock did beat earnings. Before we get to it, though, do we got any questions? I guess U.S. exchanges will do the same. Yeah, possibly. We'll see if that is the case. If U.S. exchanges do the same thing. All right, back to the main. So we got AMD holding that level. You got the Qs pulling back, but capitulating higher. S&P right off PDC. That's showing some strength. We haven't even looked at Tesla. Let me throw in Tesla on this side. Tesla with the double bottom at 276. Oh, Meta. That's what he's looking at. Meta. How is Meta looking? There you go. There's the AMD. There's the strength on AMD. Meta looks like the overall market. Let's see. Meta with the gap up and then the gap down to fill a reversal. Let's see, how's Meta looking? It really depends. Meta's pretty. I think Meta's very overextended. I'd be careful on Meta right now. You got to wait for the pullback into the trend, and the trend has been pretty. So what you could do is you have support on Meta at 309, 310, right? So 310 could be your stop. There goes AMD again. 310 could be your stop. If you don't get the stop at 310, I'm sorry, if it drops below 310, it fills the gap at 309. And if it drops that level, then you're coming back even further. But if you're not a trader, none of this really makes any sense to you. So Facebook is our Meta is extended. It really depends what position you're in, right? When you're an investor or you're a trader, it depends what position you're in. Where are you? Are you already in the name? Is this a long-term hold? Are you trying to trade it? Are you going long? Are you shorting? Is this intraday? Is this long-term? Right? There's so many, there's a lot of ways to look at it. But for the most part, price action for Meta is extremely overextended. Extremely overextended. If I go to the 4-hour charts on the macro, see what that 50-day moving averages, that's usually what we've seen price start to pull into. Meta hasn't even pulled into the 50-day moving average. I'm sorry, the 50 average, simple moving average. I can't say daily because we're on the 4-hour chart, but it's been pulling into that SMA, that 4-hour SMA. And the last time it pulled into it, it supported multiple times. you do, if you're on the screen, you do have a lot of support. There goes AMD. You do have a lot of support on Meta when it pulls into these. Come on, bro. Golly. This is not. See, is my computer hot? It is hot. Why is it so hot? Should I turn it off? Right, you get a lot of touches on the 50 SMA for the 4-hour chart. So I would wait because it's just trends, right? Meta just keeps trending. That's the only entry point. And you don't enter it just because it touched. You want to see it support. You want to see that support on there. Anyways, yeah, that's my quick little technical analysis on Meta. We are looking at 4-hour charts nowadays. All right, so back to the Larry Fink. Let's hear what this guy has to say on Larry Fink. Yeah, U.S. exchanges might do the same. That's going to push crypto a little higher. I'm going to throw in Larry Fink, and we'll listen to what BlackRock. Because look, this guy is. If you're a crypto guy, you want to hear what this guy has to say, right? You want to hear what this guy has to say. And also, they're the biggest asset manager in the world, so they have some insight on what they see going forward. But what I do have to do is turn the music off before I play this because you won't be able to hear it. All right. Should be able to hear it now.
Consensus, all just, I don't even have to go into that because it's just been a great quarter and a great time. Why? Because of man we're sitting with, Larry Fink, who is the chairman and CEO. He joins us exclusively at Post 9. Larry, it is so great to have you.
Good morning, everyone. Happy summer.
You are a man of the world. People know you, of course, as running BlackRock, but you're around the world constantly. I want to posit something. Is the United States in the strongest position you've ever seen it versus all the other countries you go to?
Relative to the world, we are in an incredible position. Our innovation, our technology, our entrepreneurialism has really fueled an incredible growth period for the United States. And I think it's showing up. It's showing up now in the development of AI. We are the ones. It showed up actually in mRNA, shows up in many other technologies. And I think we're just more resilient. We're a very emotional country. And when we have problems, we're more cathartic. We actually are, because of the democracy and the conversations we have in our country, we're more resilient in terms of identifying problems as a country. And as a country, we cauterize our problems faster than other ones. In many other, we saw after the financial crisis how long it took Europe to admit their structural issues. And so I think that resiliency and that openness, we all know that democracies are messy, but through that debate, we solve problems faster than most places. There are times when we're all frustrated and we're all, concerned, but the reality, the resiliency of our economy, the openness of change. I know change is hard for some, but our economy is based on change and evolution and recreation. And I think about that all the time. And we position BlackRock for that type of structure, that we're constantly trying to evolve and stay in front of our clients. And we believe the companies, the industries that are constantly evolving and changing, adapting, and helping their clients as they evolve are the net winners. And if you look at almost every industry, we have more leaders in more industries than any other place in the world. Now, if you also add the fiscal stimulus of the Infrastructure Act, then we have really bad infrastructure.
All right, so listen here. This is why I am this is why I don't think the economy collapses, because of the stimulus. So, and we're getting more stimulus. What did Biden just do? He just it's not really more because he kind of was already promising it, but the stimulus is coming, right? There's going to be more fiscal stimulus as the economy slows, because that's how you get GDP back up. How do you think GDP actually comes back up, right? Like, GDP doesn't come up on its own. You get fiscal or you get monetary stimulus. And so if inflation's back down to 3% right now, and it's trajected, its path is 2%, they will keep printing more stimulus.
The structure, so we needed to do that.
Right.
CHIPS Act, the IRA, that's all starting to come into the economy. So actually, I think our economy is going to accelerate.
Or is it going to accelerate fast enough, Larry, to start paying more to generate more revenue? Because our interest payments are going to soon be the largest single component of the budget. So it's great to be positive on the country, but there are plenty of issues, including that one.
David, I totally agree. You know, our deficits are out of control. And now with higher interest rates, yes, interest payments are going to be a major component of it. And that's going to put a lot more pressure on our programs, our defense budgets. All these programs are going to be really at risk. The only answer to that is growth.
Right.
Okay, if we have 3% growth, we're going to be able to solve some of that.
Exactly. The only answer to a slowing economy and high debt is more cowbell, more stimulus to reaccelerate growth, so that you could, the more money, the more that GDP grows, right? The more GDP grows, the more that you can, GDP is basically the function of spending. So all the spending goes into taxes. The more taxes, the more you can pay off the debt, because our interest payments are so big right now, which is why bond yields will have to come down, right? They're going to do yield curve control. It's not going to get out of hand. Yields come lower. And basically, Larry Fink is saying, hey, the answer to a slowing economy is more fiscal policy. So we'll see how that plays out.
If we have under 3% growth for a long period of time, the interest payments as a part of our budget is going to overwhelm us. But that being said, the dynamism of this economy at this moment is stronger than any place in the world.
See, I think when we look at what we do, when we talk about business every day, we don't celebrate the greatness. I look at the people you deal with. I look at the business people you do with. They have a level of optimism that transcends and trumps both the politicians of our country and the world, but even our people. Now, I think the optimism is muted, though, if you find really interesting. On December 2020, about $18 trillion of bonds had negative interest rates in the world. Today, 80% of the market has a 4% interest rate or higher. We haven't seen that in so long, and that's what's stimulating very large flows. We're seeing that at BlackRock, both in index and active fixed income. We have now $7 trillion in money market funds. I mean, a record level.
Sorry, I was on mute. 7 trillion. I didn't even know that. $7 trillion in money market flows. Bro, our money market funds, you know what that means? Do we understand what that means? 7 trillion? That means there's that much cash on the sideline. If the economic cycle is starting to turn up and growth starts to reaccelerate, because it is not reaccelerating, it is slowing down. But if growth starts to reaccelerate, if the stock market is signaling that because we made the lows already, we're moving higher. If if the Fed is pausing and going to start cutting in 2024, if they're going to start increasing the balance sheet again to pay off the debt, to monetize the debt that we just have, do you really think those money market funds are the cash in the money market funds will stay in the money market funds? No, not if rates come down. If rates come down, if the Fed starts cutting rates, that means you're getting less interest on your funds. The stock market goes higher. All that cash will have to shuffle into the market. So this is the most bullish setup we've seen in a long time, right? And I don't think nobody sees it. I think they're blinded to it. One of the most bullish setups, if you're looking longer term. How you doing, Jonathan? And yeah, it's coming. It's here.
Now, if that money is put to work, that will be an extraordinary benefit. I mean, when money is being saved in the short end, that actually is a sign of fear, okay? Because you're not putting it as actively in the economy. You're consuming less. And so the thing that I'm going to be watching for, ultimately, are we going to see some of that money in money market funds move back into equities or move it more into fixed income?
The Treasury's going to need it, Larry, because they're doing a lot of issuance, back to what I just asked you about.
No question. And that is one of the concerns I have. The Treasury is going to be issuing much more in the short end.
Right.
And because of higher interest rates, we're going to see
Sorry, I didn't even realize I was muted, guys. Um, I was trying to mute myself because I think it might sound better on YouTube. But this is very bullish. I'm gonna back this up and talk about this because this is really key here with the treasuries. The treasury market is key to understanding the market, and I really want to teach you guys or educate you on what's happening with the U.S. Treasury market and why the macro setup is so bullish. Why yields will come lower. So, anyways, Jonathan, XRP thoughts. Yeah, XRP basically the judge in New York passed and said that hey, the investors didn't invest knowingly that their money what is dang it, what is it, man? Let me go to my notes. Now I can't remember. Okay, so the judge Torres ruled that the Ripple sales of XRP on public cryptocurrency exchanges were not offers of securities under the law. So that's basically they're saying it's not a security. They weren't offered as a security because there was no promise of appreciation in price, right? This decision was based on the fact that buyers didn't have a reasonable expectation. So they didn't have a reasonable expectation of profit tied to the efforts of Ripple. The sales were blind bid-ask transactions, meaning the buyers couldn't know. They couldn't know if their money was going to Ripple or another seller, right? So at the end of the day, this opens up just so you know, John, this opens up the case for other cryptos to not be labeled as securities because this would overrule, right? This would basically broaden out. The problem is it's a weak argument because we all know everybody buys the coin for it to appreciate in price. So it's kind of a weak argument. The judge in New York did get that passed, but there will be further, there's going to be further not upgrades. There's going to be further updates on if they appeal it and how strong the argument is, but it is good for crypto in the short run, right? A lot of hurdles still to go over. Anyways, listen to Larry Fink, what he's saying here.
Some of that money in money market funds move back into equities or move it more into fixed income.
The Treasury is going to need it, Larry, because they're doing a lot of issuance back to what I just asked you about.
No question. And that is one of the concerns I have. The Treasury is going to be issuing much more in the short end.
All right. So basically $7 trillion in money market funds, right? And those money market funds are going to the are basically locking in their cash at the reverse repo facility at the Fed, where the Fed pays interest to people who hold cash in the reverse repo, right? It's called the RRP. And we talked about this in the past. So what it is it's generating a lot of cash, which is also bullish because if you're getting that cash generated, if you're a rich person, you're getting generated cash towards your account, you're going to go spend it, right? Or you're going to go buy stock. So it's still bullish for the market, but regardless, what he's saying here is you have a lot of cash on the sideline and the US Treasury is issuing short-term debt to actually get those rates down, to get the cash out. So what they're doing is they're issuing US Treasuries that are going to yield more than the money market funds. And if that is the case, people will leave the money market funds and they'll buy US Treasuries. Therefore, as they buy, they're giving cash to the White House, to the US Treasury, and they can now spend that money going into the future or create a new budget, right? New spending. And it doesn't take away from the stock market because that was a lot of people's argument, is that liquidity is going to be drained as the TGA Treasury General account has to be filled, but it looks like it's coming from the money market funds. Therefore, you get a more bullish setup.
Right. And because of higher interest rates, we're going to see more defeasance of pension funds. And so the demand for the long end is going to be large. So to normalize our yield curve, it's going to be hard for me to see that to happen anytime soon because of the absolute supply of treasury.
Right. Although you were so early, Larry, in drawing people's attention to inflation,
yeah,
and how that would be a stair-step function coming out of COVID. Have any of the downside surprises this week impressed you at all?
Sorry, I know it kind of sucks. I'm going to fast forward it just to the key points. I don't really want to hear everything.
Not energy prices. If you look at now, like in used cars prices, if you look at the home builder stocks, record highs this year. Are we starting to see a renewed activity? As I said, with the IRA, the CHIPS Act, and the Infrastructure Act just starting to hit the J curve, the demand for workers is going to be extraordinary.
Well, if
So-
we were at 6% unemployment, we'd be in terrific shape, be able to handle this. We're at 3.6.
and I think we can go to 3.4, not 3, not
Wow, he's calling for 3.4% unemployment rate. What does that mean? That means the CHIPS Act, as it keeps playing its way out, the infrastructure and the IRA, the Inflation Reduction Act, which we've been signaling this whole time to keep the economy from falling apart, right? Is there's going to be more demand for jobs, more people work, more productivity, more spending, more payrolls, not inflation, because you're producing more. The more you produce, the more supply, the less pressure on prices. Therefore, you have a golden scenario where growth is accelerating and inflation is coming down, right? So stick this in your head. Stick this in your head. We are seeing the most bullish really setup. Stop looking day to day. Don't look day to day and think, oh my God, it's up, it's down. It's not really. Look at the trend. We're grinding higher consistently. See, if you're confused, go subscribe to the macro newsletter. Link in the description, right? Link in the description, wherever you are, Bluetube or I wanted to say Thought Talk because that's what it is, but Thought Talk. So anyways, go check it out, right? Subscribe to it. I'm writing. I'm going to finish it up today. I'll be finishing up today as the market close. We'll get all the data in there from this week. A lot of good stuff on market breadth, CPI, inflation. And I will be live tomorrow in the morning sometime. Hopefully I get some sleep tonight a little earlier. I got to lift though. So got to hit the gym. Make sure you guys hit the gym. Got to get those, get that muscle up. Right. What the heck am I talking about here? Sorry. But anyways, yeah, I'm going to release that tomorrow. So we'll talk about that. I'll be live tomorrow going through the whole report, long forum, so you can understand. But it's a bullish backdrop. And if you're interested in knowing what should you buy, I'm not telling you what you should buy, but I will tell you what has the best upside in my view. If you are live tomorrow, we'll go over that. We can go over the technicals after we go over the macro report. It's really a macro technical slash economic policy report. So once we get through it, ask all your questions, Q&A, and I'll keep you updated in the market because it's a lot of data. It's hard to keep up with. It is a lot to keep up with. And when you hear the experts talk about it, they talk in these big terms, and I'm trying to simplify it, right? We just want to simplify it because big words mean simplified things. You don't really, a lot of people like to talk in big words, but who cares? Like nobody understands what you're talking about. The average person can't understand that because they didn't get, I didn't either get a degree in financial literacy. And so, these concepts are really simple concepts like save money and invest your money, right? Instead, they got to say all these big words. Either way, I'm going to fast forward through this to the main points here. I'm still watching AMD. It is starting to wedge. Google looks like it bounced off PDC. I haven't seen Tesla yet. The overall market, I can't see it, but it is looking good.
And that's why
That's going to keep wages
much higher. And
Jim
that's
says it all
why-
the time.
And that's why I think interest rates or inflation is going to be stickier. And I think we saw a low because of that. I think the next $5 to $10 of energy prices is going to be up, not down. And you talk to the executives in energy, that's what they're saying right now. And so I think
So he says that he thinks energy prices are going to be up. That is a risk that I always put out there, which means inflation remains stickier. And that's exactly what he's saying, is that he thinks inflation remains stickier. So we're keeping our eye on the price of oil. Well, oil just had a nice dump at the 77 level. Well, it's at 77, so it's not really a dump. It is breaking out. Freaking oil, man. Oil's starting to break out. Come on, Saudis. Russia is overtaking. I read this yesterday. Russia is overtaking a market share from the Saudis. So can they keep that up? Will that remain? We'll see. We'll see if the Saudis start coming back in. When it comes to the OPECs, anyways, the OPEC nations, Russia is now producing the most oil. They're on track to do that. So, market psychology, human psychology says they don't want to get, people are selfish. They don't want to get away with that. I'm sorry, Saudi doesn't want Russia to take market share. So I anticipate them to start producing more or to stop their cuts. So we'll see how that, everybody wants the price of oil to go up, but you don't want to lose market share on the way, right? Anyways, back to it. He believes we have stickier inflation.
we've seen a low in inflation, and I think inflation will be sticky between 3 and 4%. And if I'm right about the job creations and the need for labor and what that's going to elevate wages, we're going to be in a period of 3 to 4% interest rates, inflation, which will translate into a Fed that I think is going to be reluctant to turn off their platform of raising rates.
So does
By the way, if we get 3 to 4 inflation, bro, that is bullish for stocks. Inflation helps earnings. So again, your economy, your wages are always going to suck. Okay, your wages are always going to suck. Sorry to say it. Well, actually, I'm not sorry to say it. You need to get this through your head. You're not going to build wealth through your wages. You build wealth through investing in asset prices, right? In assets. Not every asset, obviously, you got to be smart about it. But the point is that we're focused on the markets here because that's where all the alpha is. That's where all the gains are at that you've been lied to. It's too risky. Don't be in stocks or stay with the best appreciating assets are always growth / tech. You just have to pick the right ones. Okay. You want to stay safe in value and dividends? Go for it. That's great. But hardly any dividends actually outpace actual growth stocks. Now, hey, if you're worth 10 million and if you could throw 10 million inside of a dividend fund, first, make sure the company doesn't fall apart. Number two, you might as well throw it in a US Treasury where you get 4 or 5% for free, risk-free, right? It's risk-free. There's no company. It is the government. So you might as well do that, not a dividend company where there's risk to that actual company. I'm not saying you can't. I'm just saying in general. And also, yeah, disposable income. Also, my whole point here is that if inflation remains hot, bro, stocks go higher, right? Invested companies go higher, their earnings go higher because you got to keep pumping. And also, as they print more crypto or store of value assets, well, we call them risk assets because they do better with lower interest rate environment. They do better when the Fed prints money, when the economic cycle starts. They go up the most. Okay, so that's the difference there. Am I trying to convince you? No, I'm just trying to open your eyes that growth / tech names, especially crypto, nothing is going to outperform crypto. It hasn't, just isn't the case. Maybe Tesla, maybe Meta. I don't know. Maybe Tesla can. Maybe some of these really small caps like Palantir possibly can. But we're looking at, the game of money, the business of money is the biggest business on earth. And that's what crypto is basically looking at, the game of money here. Is Tesla breaking the 278 channel? I'll take a look at it. I haven't seen yet. Let me see. See where Tesla's at. But AMD is, let's see. Yeah. Tesla is above 278. It's at 279. Oh yeah, that's really bullish too for Tesla. Oop, this is the wrong thing because I see that price action. Very bullish price action now. It looked like it was earlier in the day. Once Tesla gets above 280 and holds, it's gonna launch. It's gonna launch, and possibly today after the backdrop of better than expected CPI on Wednesday. You know what? This is probably way too loud. Let me back this up a little bit. Better than expected CPI on Wednesday. Better than expected PPI on Thursday, and then all of a sudden bank earnings are positive. I expect us to grind higher today into Friday. A lot of FOMO probably in the market. S&P is struggling a little bit. Actually, advanced decline is negative, so maybe not. But the VIX is also falling, so we'll see how that goes. Tesla over 280 probably makes another move higher. That's what I'm looking like here. That's what it's looking like on this side. Yeah, we'll go over some more technicals. Let me know if you want me to look at the technicals, or I will for sure. Paul Alger. You need disposable income from wages to invest in the markets. 100%. So you got to have that disposable income. If you could live off of 30% of your income, that'd be like perfect. You go invest, about 50% of it at the right time in the right, in the right environment. And then the other, what does that leave you with? That leaves you at 20%. The other 20%, maybe you spend a little bit, enjoy your life, work on your health, right? Spend on your health, improve your health, improve your knowledge. So invest in your education, invest in your health, and invest in and invest in a small little emergency fund, and then you live off the 30%. A lot of people can't do that, especially in this environment. But that would be the optimum. That would be optimal, right? That would be optimal. So of course you need disposable income, but you got to get started at some point, right? You got to find a way where you can cut your expenses, where you can cut your spending and invest in yourself going forward, education, fitness, health, and in the market, so that you can build wealth over time and have something for your children instead of using government, having to live off the government who's just going to control your data in the future. It's not really freedom. Anyways, yeah, back to it.
Doesn't sound like you're counting on a lot of labor displacement from AI and rises in unemployment.
Ultimately, I actually do believe that will happen, but I don't believe that's happening at any time soon. I think that's a year, 2, 3, 4 years away. I don't see that happening now. AI has huge potential. It is going to increase productivity. It has a lot of potential, but how we adapt it, how we organize ourselves, I don't have the answers yet. I mean, we're all studying it. We're all putting huge teams of people on this, and we all see how we're going to adapt to it. I mean, we're looking at it quite extensively. We have our platform that uses natural language processing already. We look at that. We look at big data analysis, and we're looking at how AI can accelerate that.
I wanted to ask you about energy.
Yeah.
Because we had a deal this week. Exxon buying
Love
Denver.
Denver. Love
Yeah.
it.
I mean, listen, it had been something we've been thinking that might happen in terms of carbon capture.
But it's exactly what I've been talking about.
Yeah.
We have to be working with our energy companies. They own the geology. And what Darren was talking about, now he owns the pipelines that put it into their geology.
All right, yeah, this is a long interview. This is a long interview. I want to see if he
We have
talks
to
about.
move aggressively, make sure we have energy security enough.
See what he says about crypto.
Trying to forge a new future to us in terms of the capital flowing to where it can to actually decarbonize our. In terms
But also,
of decarbonizing,
he understands the risk of not doing the
how do
right
you
thing is
see it?
horrendous.
First of all, it's our clients' money, and they make the determination where it is. We are seeing more interested parties who invest in decarbonization, your carbon sequestration.
Okay. I want to ask you about a different IRA.
And I think this is going to happen more as we are aging our population. We're seeing more of that fear. And it's our responsibility to make more people, or to help people to be more prepared, that they can live in retirement with dignity and hope. 20 years ago now, with the...
Like Zelensky do when he talks to you.
We have an enormous responsibility and opportunity. When I had conversations with that we have the construct of a fair and just, no question in my mind that a great economy has a great banking system and a great capital markets, and no country in the world has. We don't do this with leverage.
All right, never mind. That's about it. I thought he was gonna say something a little better. Bullish on beauty, Ulta. Yeah, you gotta be bullish on Ulta. See, do we miss something else? Squawk. Oh shoot, Kathy Wood today, 6 p.m. Eastern. Okay, so that's about 3 p.m. my time. Kathy Wood speaking. See what she has to say. Maybe she could pump our bags. It's funny when people always say, they talk smack about anybody saying, oh, they're just pumping their bags, when literally that is the one thing that they want to happen for their bags, right? It's like, oh, if it's not my bags, it's a scam. But if it is my bags, thank goodness. Qs. All right, so we're going to get back to the markets for now. Jump back onto the charts. These charts at least. Oh, what the heck? I didn't mean to do that. It erased my previous I didn't know it was gonna do that. Let me turn this back to where I had it. Dang, that sucks. I didn't realize it was gonna change my whole layout. What does that look like on YouTube when I'm doing this? Dang, I didn't know it was gonna change my layout like that. All right. So yeah, we got Tesla on the right-hand side starting to turn up a little bit. Let's go, let's load the trader strategy. I know what it does. It keeps loading that thing. Let's save this so that it loads on the 1 minute chart from now on. Yes. AMD looks like it's about to blow though. AMD with the double wedge. Holding that 9 EMA and 20, well, holding the 21 EMA. It's starting to push right now as we speak. Left-hand corner, we've got the Qs in a wedge. Qs in a daily wedge. IWM found some support. S&P back above VWAP finally. On the right-hand side, we got Tesla above yesterday's highs. Very bullish. And we are moving up. There goes AMD. Got Roku pushing up also. And then yeah, we are headed to earnings season. Let's see what we got. See, where's earnings season? Let's see what we got in earnings season. There goes AMD starting to push now. Finally up. So from the big companies, we had PepsiCo beat earnings yesterday. See who else we got? Progressive. They missed earnings. United Healthcare. BlackRock. State Street. Monday. Monday, you got Hasbro, nothing serious. Bank of America on Tuesday, that's the Bank of America for Mark Bank Mellon is actually investing in Kimberly, by the way. No, they're trying to get whoa. Spoke, what are they talking about? Bank of America, we have Bank of New York Mellon, we have Morgan Stanley, Bank earnings. Wednesday is the big test of the that on Wednesday, Snapchat on Wednesday, the other AT&T, whatever, Goldman Sachs. And then Thursday we get Johnson & Johnson, Philip Morris, tobacco company PPG. And then Friday, next week is Tesla finally hold and break above 280 with earnings next week. I thought a run up would happen. It looks like it, bro. It looks like it. Just taking a look at the technicals. Obviously, you can see the cues up there. Well, if you're on Bluetooth, you can see the cues up there. The cues look like they want to move higher. S&P back at V. No. Yeah, S&P right above VWAP. If S&P can hold above VWAP and the cues break out, Tesla's going higher. But if S&P can't get and hold above VWAP, maybe not. Oh, my voice is cutting off. Bro, what is going on? Thanks for letting me know, Hassan. Here, let me try to do something. How's that? Let me know if how the voice is now. Let me know if that's a little more clear. Still cutting off? There goes AMD pushing out. AMD breaking to the upside. Let's see, what does that look like on the bigger term chart? Still think we get a pullback. It's not going to go straight up. So maybe you get a pullback on Friday somewhere where I can enter a little more. See Tom Lee, anything on Tom Lee? Did he speak this morning? No, this was the other day. Let's see what Elon's tweeting here. It looks like a lot of people jumped into Twitter threads when it first came out, but they're already dropping off. Twitter threads dropping off, and the return of people are going back to Twitter because the Instagram threads kind of sucked. You can't do as much as you can on Twitter. There's certain things you can't do. You just can't see. It just feels uncomfortable. Not as good of a user experience there. Bonds might be looking appealing, but only for now. Also, what are U.S. Treasuries looking like at the moment? Because if they're coming down, that short squeeze might be ending. The end of the short squeeze. Right at the end of the short squeeze means lower interest rates. And bonds start to bid back up. It's just tough. Bonds might just go up because inflation's down. So you're going to collect more interest versus inflation, right? You get positive yield if you're getting 4% and inflation's at 3%. You're finally getting that positive yield. So that would be a positive for bonds. But does it carry much higher? No, because I think there's going to be more interest in the stock market. Or equities or crypto, whatever you want to, however you want to spin it for yourself. Bitcoin trying to get of 3,200, ETH above 22,000. Gold still ain't doing nothing. I mean, it's trending up. Gold is trending up, but not doing much. Bitcoin dominance still coming down. KB Homes takes home builders to the highest intraday level on record. Yeah, home builders are, the economy is strengthening. That's all there is to it. The economy continues to strengthen. Not much to argue there. And I must have got a bad recovery. I feel like crap today. Tesla earnings, I think, are going to be pretty solid though, because the Model Y is the best-selling car in the world. So that profit, that margin growth, that revenue growth should, now that we're seeing sales in Europe, Australia, we should get pretty good revenue growth. And the price cuts should help that revenue growth. Margins should be bottoming. You got the supercharger network expectations. You have full self-driving expectations. I don't know if that really comes on to this earnings call, but they're going to ask questions about it. And then you have the Superbot, whatever it's called, which won't come on, but you have the Cybertruck definitely as a catalyst for the end of the year. Cybertruck release. Definitely millions of pre-orders for that. I don't know if they can use that as revenue though yet. I wonder when they actually use it as revenue. Venture debt evaporates? What? Everybody wants to buy bonds now that inflation's coming down. That'll be good, man. The more that bonds bid up, the better for the market, because if bonds go up, that means yields come down. That eases financial conditions. See what's going on here.
Based on the first 6 months of the year. And then come September, because again, also the July meeting is sort of a foregone conclusion. The September meeting is anybody's guess and data dependent. That I think we're going to see a pretty quiet summer where the VIX stays pretty low. And then when we have sort of back to school, back to work, and we start to have more of an understanding.
Yeah, right. I mean, this could be true, but she says growth stocks are expensive. I guess it depends what growth stocks you're looking at. Probably true to some degree, right? Not coming out of a bear market though. Not when inflation's coming down. When inflation comes down, it makes things less expensive, right? Well, it gives you fuel for the fire. Bonds become more attractive than stocks this summer? Possibly. Bullish on gold and oil. Okay. Bullish on gold and oil. All right, that's fair enough.
Of, is inflation capitulating? How are people feeling about the path forward? Then I think you'll start to see some more people leaning in and doing so with conviction as opposed to out of FOMO.
Ali, I wonder, when we start to get real non-financial earnings in a few days, how you're going to process the next couple of things. One is the spread between CPI and PPI and the lower input costs, the effect on margins, and then the dollar. I mean, and the tailwind that maybe not show up in this.
So lower, so the spread between CPI, PPI, what is it? The bigger the spread, the better the margins for companies, right? Which helps earnings growth. The dollar comes down as the dollar, that's the big story really for me. As the dollar decelerates, keep my eye on that dollar. What are we at? 99.50. The dollar decelerates, that also pumps margins or future revenues because it costs less to trade. Multinational big companies, Amazon, Tesla, Netflix, they're going to have better earnings because of the dollar. So dollar weakness is a huge tailwind, right? For earnings. Man, I can't say it enough.
Particular set of prints, but definitely in Q3. I mean, how much of a tailwind is that going to be, at least for multinationals?
Have you touched on the NQ rebalancing that starts on the 24th? Hedge funds will probably sell as well. Yeah. I don't think it's Beezer. I don't think it's that serious. May cause a little bit of volatility, but I always say, hey, if everybody's in the market, it could cause a little, riff. Maybe some day trading opportunities, maybe a weekly trading opportunity. But the overall trend, like the overall bull market narrative, I think it's nothing. I think it's just dust in the wind when it comes to the overall trend, right? The dollar breaking down is a lot more heavily influenced than, well, I think it's the dollar breaking down is a bigger impact than the rebalancing on the NASDAQ. So maybe, the rebalancing, I don't know, maybe it causes a little bit of volatility for sure, maybe slows things down, but I think really it's a non-event. I don't think it's that important. That's my take on it. So yeah, maybe it creates some trading opportunities. Even before we going into it, it could create trading opportunities. We might sell off going into the 24th and then bid right back up because everybody's like, oh my God, it's going to go lower, right? So I don't know, but I do think it's like a non-event. I don't think it's very important rebalancing. Everybody's still buying the market. So a lot of cash on the sideline.
Well, look, we've been saying for quarters at this point that it will start to be a tailwind instead of a headwind, and we've been wrong. So I think everything, in a sense, whether you look at UBS or you look at anyone on the street, the last 6 months from a whole host of things, right? We all had a view that OPEC was constraining supply and that would affect oil. Everything has sort of been a anti-consensus to this point. So I think what starts to happen is we start to see a little more quote unquote consensus, sort of what you would expect as an economist to start playing out in the numbers. I think that the dollar will start to help US companies, absolutely. Now, the question is, again, does that help earnings in a sustainable way, or is it really sort of a, quarter by quarter, the dollar is going to either be your headwind or tailwind, but you're not actually increasing the sustainability and the margin going forward? And I think that's what we have to start seeing. We have to start seeing the CPI and the PPI look, that companies can make decisions because they understand where the cost of labor is going, what their consumer can afford, and what their input costs. And month to month has really just been, in a sense, a coin flip. And there's not been a lot of predictability for C-suite teams right now. And I've seen that as frustrating for investors as well as for my C-suite teams.
Yeah, that might be why sometimes the street kind of sets the for.
Hey, do we got any more questions? I'm gonna end it a little earlier. Don't forget to sign up for the macro newsletter coming out tomorrow. Jump into the stream tomorrow. Also, possibly on Sunday, and I'll let you know for sure tomorrow. In the comments, we'll let you guys know if we're gonna have that debate on the bearish versus macro, whether we do it on TikTok or YouTube. I'm not sure yet, but we should be having a debate with one of the guys. One of our followers basically pointed out there's a guy on TikTok who's very bearish, and he points out the macro bearishness. And I reached out to him, and he said he's willing to have that discussion. So hopefully that happens on Sunday. I'll let you guys know when we get there. But yeah, any other questions before we close things out here? Got to get started on the macro stuff. Get the juices in. But yeah, if you're on YouTube, I'm gonna go over the macro one more time, right? I'm gonna go over one more time so we can see here, so you guys can see here what the real signal is. Number one, this is the most important thing. The dollar is breaking down, right? The dollar is a secular. So if I throw on, should we do S&P 500? Yeah. If I throw on SPY, you can see that the dollar has a secular inverse relationship to the S&P 500, right? The whole time that here, the dollar, when it dropped, I'm sorry, not when it dropped, the whole time when the dollar rose, right here, or the dollar dropped, we had the secular bull market back in 2020, right? That's just one example. And then when the dollar started to rise, the S&P peaked. And guess what? The S&P bottomed exactly when the dollar peaked. So they're very inversely correlated, not one-to-one. It's not a one-to-one correlation exactly, but it's a risk-on signal. And you can go back in time and see the same thing. There is times where they rise together, but that's usually has something to do. This is about inflation, though. That's where the risks are at. So here back in, what was this? What year is this? 2016. We had the same thing in 2016 where the dollar, the dollar was falling and the market rose significantly. So now that we're seeing the dollar finally start to tank, that's, I think that's a big signal there. And on top of that, 10-year yields, turn this off, let's get this off of here. On top of this, we get 10-year yields starting to roll over too. Actually, I don't know if they're rolling over. They might be a little sticky, but if they have peaked, then the, interest rates, real interest rates are peaking, that is positive. That's a positive sign there. And they can't really go up with inflation making this move. Now, there is a record short positioning in the bond market. I always say this all the time because what it means is as they cover their shorts and people start buying bonds, so TLT, right? As we see TLT start to break out and we see yields start to come down, then the cost of capital comes down, and that's going to be really good for riskier assets, equities, crypto, whatever. That's going to fuel that. Big risk here is oil holding, moving higher. It is starting to break the downtrend that started last February when Russia invaded Ukraine. That's when we first started to come down. Everybody thought, oh, it's going higher, but that was the peak, right? That was the peak. And actually, no, I'm sorry, I lied. That we peaked. That was actually was the peak, but the downtrend started on the retest in June, so June of 2022. So here we are a year later, and oil is still trending lower. So what's going to get oil higher? Well, if we have to start buying back oil, but Biden keeps draining the SPR, and if OPEC keeps cutting production, which I don't know if it's going to happen because Iran's selling cheap oil and there is low demand for manufacturing, but maybe we were wrong here. Maybe it just trickles around 80 to 75. That's still okay. It just means inflation doesn't collapse. That's all it means. If it gets above 85, we're in trouble. Okay. Looking at the VIX, volatility is coming down. VIX volatility, NASDAQ volatility, bond volatility, all coming down. Triple B spreads, credit risk, non-event, right? Credit risk is not happening. This will be in the macro report also. Junk bonds, high yield ETF, the high yield ETF, JNK, still trending higher. So there's, people are taking risk in corporate yield, right? Corporate bonds or corporate debt in general. That's what that is. The yield curve inverting, so inverted. I know people say, oh my God, it's so bad. It's inverting so bad. Well, we did have a credit event, sort of. I guess you can't call it a credit event, but we did get something break. And so this signal is true, but the Fed stepped in. The balance sheet went higher, right? We saw, let me see. So when this thing, is this global liquidity? Yeah, this Fed stepped in and we got more liquidity when that actually happened. Now, people like to point out the fact that global liquidity is rolling over, but it's not. It's actually bouncing. So I just know all the bear arguments and they're all kind of disappearing. They have to really reach. They're really reaching to get anything going here. So global liquidity is picking up. This doesn't even count fiscal, right? So this doesn't even count the fiscal liquidity. This is only central bank balance sheets. It's not even counting government spending, which Japan is doing. They're about to do more yield curve control, which means they purchase more of their bond market to get their rates lower, more liquidity from Japan. China, same thing. They're about to start printing. So all the risks are evaporating. Oh my God, there's no market breadth. Yeah, market breadth is moving up. Market breadth is moving up, and there really isn't no solid argument in my view. The best thing is, hey, the best bear case is that oil explodes and inflation starts to revamp up. But obviously we're keeping our eye on that on a week to week basis. We'll see how earnings go. Oh, that's the other thing, earnings. I want you guys to keep in mind this also when it comes to earnings, because nobody's peeping this out. Nobody's really paying attention to it. I haven't seen nobody talk about it and what it is. I'm going to throw these charts up here on the YouTube. Okay. First, survival of the fittest. So what are they talking about? Big banks, Q2 estimates, don't care. So survival of the fittest. And this chart represents, let me make myself a little, put myself away. So what this chart represents is the number of S&P 500 companies with Q2 positive and negative EPS guidance going forward. All right. So what you see here in green, positive guidance, in red, negative guidance. Energy is pretty much neutral, with information technology pretty much neutral. The difference is you have a lot more negative EPS, and then you have a lot more positive EPS guidance for technology and consumer discretionary and industrials. So what this tells me is it's survival of the fittest. There's some companies who EPS is going higher, and I believe those are the companies who are going to dominate and continue to rip higher. And you have some companies that have negative guidance, but more than likely those companies are the ones that are not surviving this high interest rate, low growth environment. So great. Some companies sell off and some go higher. And really, this isn't even the main chart. The main chart that I want to show is this swing in expectations. The swing that is where negative EPS, you could see it in red, has been climbing. So negative, and this is going into earnings. They basically do pre-announcements on their guidance, and I think we peaked in Q1. That guidance peaked in Q1 and it's coming down, right? And at the same time, we're getting a bottoming in positive EPS guidance, and that's going back up. And so what that tells me is is Tesla starting to roll? Tesla starting to break out. What that tells me is that EPS is starting to bottom. Now the market, this is what the market feeds off of, bro. It doesn't wait for EPS and growth to be very strong. It moves beforehand. EPS, I'm sorry, the market moves beforehand. It moves before this even takes place. So keep your eye on that. What's another factor? Well, GDP estimates are going up, right? GDP estimates are going up, not down. That's another one. Here's another chart that I haven't showed that I'm going to show it'll be in the newsletter. How the S&P fares when 80 to 85% of stocks are above their 50-day moving average, which is the case right now, right? Week one. So when you get 80 to 85% of stocks above their 50-day moving average, this chart is basically showing you in the dark blue, the percent return over time, and in the light blue, what percent of time it happens. So if we move to all the way to the right-hand side, what we see is 85% of the time, when 50% of stocks, when 80 to 85% of stocks are above their 50-day moving average, 85% of the time, you get a 12% return on the S&P 500, which equates for, obviously the more riskier high beta stocks a lot higher. And 12% return from here would take us where? Where's the 12%? What would 12% take us? Let's take a look on the what 12%, excuse me. Let's see where 12% would take us. All right. Let's go to SPX. All right, where's 12% and get the stupid global liquidity. Hey, that's funny though, huh? Global liquidity bounced, and what do we see? You see global liquidity bounce, and you see the market breakout. I'm going to take that off though. All right, so 12% here from here would take us, and you know what? This was before the breakout. So this came out a couple of days ago. This came out before the breakout. So I'll go back down to the 44.50 level. 12% will take us to all-time highs, right? So basically in 12 months, we should be at all-time highs from here by 2024 summer. I don't think that's a very unreasonable 85% chance of that, according to the estimates, according to the correlation, 85% chance. Tesla is flying. Let me take a look at Tesla. Oh yeah, we're at 282. We're breaking out. Tesla's breaking out of that downtrend. Let's go. Let me flip back to that other chart before we get to that question from Paul, or that comment from Paul. Is this actually, no, this is not the chart I want to see. Let's go right here. All right, we got Tesla on the right-hand side. Oh man, AMD pulling back down. What else do we got? Roku also pulling back down to that level. Damn it, Roku. Killing my gains. Oh my gosh, dude. Technology really pisses me off. So very hot computer. It's okay. I'm trying to show the Tesla chart here. So AMD is pulling back to VWAP. We'll see if it supports here. This might be a good buy. Let's see. What does the S&P get above VWAP? Nope. S&P got rejected. Advanced decline is weak today. So I would say, what did I say yesterday or the past couple of days? I said I think we need to consolidate after this good report, get the earnings in, shake out a lot of people who are chasing, shake out a lot of people who are shorting, and consolidate above the highs. And then maybe next week we start digesting more of the news and we move higher, because we get our big mega cap earnings reports from Tesla on Wednesday, and Netflix, and a couple more banks. So yeah, we might have to be a little more patient, but I think that's what we're going to see here going forward. And so that's AMD. Let me put up Tesla on this left-hand side. Oh yeah, Tesla broke out over that level. Yesterday's high, today's highs of 280, moving up. I think that return is from beginning of year, fiscal year to end year. Oh, Paul Auger. Okay, Paul, I see what you're saying. Well, the return was based off of stocks moving above their 50-day moving average. Let me pull that up. Yeah, how S&P fares when 80 to 85% of stocks are above their 50-day moving average. So I guess you'd have to know, when did stocks start to move above their 50-day moving average? That would be the actual question. All right, so yeah, we got Tesla on fire there. Tesla's starting to move up. All right, well, hey, I'll be live tomorrow morning or before lunchtime. Well, I guess my time. It may not be all of your guys' morning. No later than 12 p.m. Eastern time. You should see it go up in the YouTube channel. If you are following, don't forget to sub to get the updates on the lives. And we'll go over the macro report and basically make the case why stocks are headed for all-time highs, why crypto is also headed. I don't know about all-time highs this year. I think it can happen. I think it could easily happen if the macro really improves, but I think definitely S&P 500 headed for all-time highs. Man, if inflation really abates, well, if all this stuff, that's why we're going to do the report, because then we'll find out exactly. We'll see what is it going to take to get us, to all-time highs. What is it going to take to get us, maybe at the same level to go lower, right? What are all those risks coming into the market? What are the disappearing risks? Let me make sure I didn't forget anything. And the main things here are inflation risks, right? The Fed stopping their QE cycle, earnings are coming up, positioning still off sides. We look at volatility, triple B spreads, the dollar, yields, market breadth, and the cost of energy, because that's the most important one. All right, guys. Oh, dang, Tesla moving up. Look at that push. Look at that push. Nice. All right, guys. I'll catch you tomorrow. I appreciate you guys supporting the channel. Again, you guys have a blessed evening, right? Stay healthy. Get your workout in. Get your good sleep. And we'll catch you tomorrow. Make sure I don't forget anything. Stay blessed. Stay blessed, my friends.